Wine actually is not a new asset class. People have been investing in wine for quite a while. What makes it new is the fact that the ability to trade, to buy and sell and realize those investments is becoming much more simple, cost efficient, and this is exactly what WineBourse is all about. We actually bring the buyers and sellers together on a platform which is low cost, transparent, and really brings an investment professionalism to this market. I think from an individual point of view, you start off as a wine lover. Typically, it becomes a passion. Start collecting, like any collectible, it grows significantly and probably gets to a point where you've bought far more wine than you will likely consume. At that point, you are an investor. As time goes on and your tastes change, you might want to sell some. You start to look at how the market functions. You look at the price rise. And you look at the dynamic of fine wine as an investment. Over time, it improves with quality, and over time, supply diminishes through consumption. So the demand-supply dynamics are very positive for a price rise. We've adopted the same financial market standards for transfer of assets over a platform exchange that you would normally see within any modern stock exchange. This means primarily a delivery versus payment settlement, which is very unique for the fine wine market. This is an assurance to both buyers and sellers that there won't be any financial loss from a failed transaction. There's also the great efficiencies that we've built in through automation. Our platform is integrated with the stock management and logistical operating systems of the warehouses we operate in. So we have a tremendous advantage in terms of speed of execution. And then finally, I think in terms of one of the other main advantages is that we've expanded this marketplace well beyond just the United Kingdom and now well beyond just Europe. The movement into Hong Kong signifies the importance of the Hong Kong market and the wider Asian market to what we already see as a very global trading business. Well, we're in such an ultra low interest rate environment right now that continually money is flowing into alternative investments. And really, I think people look for stores of value. They look for asset classes where you have a store of value. And fine wine falls into that category. What was always problematic before was the exit cost, realizing your investment. And that's the problem that WineBourse wanted to solve. We allow this not only disintermediating the supply chain so that you can deal directly with individual suppliers in European countries, but also you're able to deal directly with a peer-to-peer on a very low brokerage margin. So with wine, again, the dynamic in wine is that fine wine in particular is going to last 30 to 50 years. Its drinking window will probably begin generally around 10 to 15 years after it's bottled. It's a suitable product for long-term storage. And if you have the right facilities for long-term storage, there's absolutely no reason why that's not going to last 30 or 50 years. So the demand for the wine after 10 to 15 years starts to increase significantly because that's the right drinking age. On the other side, just through normal consumption, the supply is decreasing. You're only ever going to have a finite amount of a 2010 vintage of a certain wine. So from a long-term capital appreciation, the supply and demand dynamic is extremely positive. And that's what's always attracted people who have been investing in wine.
One of the key target segments for WineBourse is the e-retailers of this world. WineBourse's strategy to meet the needs of e-retailers is through our API, which will provide a real-time stream of our live offers and allow the e-retailer to connect with us real-time through a buy now event. So in effect, the front end of the transaction is happening on the e-retailer's platform, and WineBourse is managing the transaction flowing in the back end.